The theme of my presentation is that the BRICS are more dangerous than ever. And dangerous might not be the right word, but I think they're becoming more legitimate than ever. Now, the crux of what I was talking about, it centers around the development that we saw a couple weeks ago where the Shanghai Metals Exchange came out and said we are going to internationalize our exchange by a series of multi-jurisdictional hubs around, the first one in which is under construction right now in Hong Kong, the next one in Saudi Arabia, and then a set of contracts has already been put in place to build these exchanges or these depositories all around the Belt Road, through Africa and through Asia, ultimately into South America. And you look at some of the other exchanges that just have come to rise, like in Singapore. We see the growing sentiment of not only the Shanghai Exchange, but the exchange in Dubai. We're going to have an exchange in Moscow that's going to gain prominence. You're going to have an exchange with the BRICS. The whole idea and their announcement that the Yuan is now convertible into gold on the Shanghai Exchange using that moment exchange rate for Yuan, not converting into dollars, but for Yuan. In other words, the Yuan is being internationalized, and they came out and said this. So you can see the chess pieces are being put into place where they're going to internationalize Yuan and trade it over their bridge platform, which they announced as well. 3 weeks ago, they made the announcement that the renminbi cross-border payment system, which is mBridge, has been integrated and already fully operational with 11 countries in Southeast Asia, the Asian countries, and 5 in the Middle East, which at present time represents nearly 40% of global GDP. I think 38% was the exact number. So you got those countries. And then you have the BRICS, but then you have the Belt Road and the Shanghai Cooperation Organization. Each one of those two organizations alone account for, the SCO accounts for 50% of human population, 35% of global GDP. Now, there is some crossover in the Belt Road, which is 70% of human population and about 50% of global GDP. You can add in other organizations like the Asianic countries I mentioned, the Eurasian Economic Union, like Kazakhstan and Russia. There's crossover, but all of these entities are closely aligned with the BRICS. They're not in the BRICS, but all closely aligned. And the whole premise of what I am talking about is that, first and foremost, the mistake the people in the West make is they think in terms of seconds and days. You can see these are very strategic moves that are being made to open a series of multi-jurisdictional branches of the Shanghai Metals Exchange and others that aren't directly correlated with Shanghai Metals Exchange, but they're all connected. And the premise is that every one of the countries where these exchanges are built will all deposit little bits of gold in all of the exchanges. So I put some gold in here, and everyone does that. So the gold is not held in one jurisdiction by one player. And that way, any imbalances, whether it be once a month or once a quarter, is settled in gold and will ultimately be in various jurisdictions. So the pieces are being put into place. Now, when you think about the Belt Road, when you think about Shanghai Cooperation, when you think about all of these groups, the Asianic countries, Middle Eastern countries that aren't in BRICS, it's substantial. And the one pushback that people like Daniela make is that they're not legitimate enough. They're a sideshow. They're not big enough. Sergei Lavrov, I think, really upped the ante when a couple weeks ago he came out and said, after it became evident that the primary thrust of Brazil's holding, it's in fact, it's today that the meetings are going on, yesterday and today, I believe, was that they want to develop a new payment system independent of SWIFT. That's what this is. But Lavrov came out and said, well, that's what they want to do. Great, we're going to open up this new technology to non-BRICS members. However, it's not compatible with the pound, the dollar, or the euro. So they're keeping the West out, but now put it in context of what I just said with the Belt Road, the Shanghai Cooperation Organization, the Asianic countries. If they are all involved and closely aligned with the BRICS and the BRICS nations, but not BRICS, and they are going to open this payment system up, which allows for payment in local currencies, which only strengthens one another's economies and their own system, rather than converting to dollars, making the trade, going back from dollars to the other currency. You got 4 conversions back and forth, and all of this time This new bridge platform settles in 7 seconds, not 3 to 5 days that SWIFT does. This new platform has a 98% reduction in fees. All of this stuff put into play, and then think about the size and scope of opening this up to non-BRICS nations is enormous. And all of a sudden, you have something that can very quickly challenge not only the settlement status of the dollar, but the reserve status. Because what gold is doing in all of these vaults is not replacing the dollar, it's replacing what stands behind the dollar. It is a skeletal system, these vaults, of a whole new infrastructure, monetary infrastructure, and gold will take the place of treasury bonds. That is what, in my mind, it is doing. It is backing with legitimacy. The whole thing in the United States done again is that once we left the gold standard in 71, we were a system based on trust. And for a long time, we were trusted and revered. And you could argue the last 4, 5, 6 years, that level of trust is waning. And I think the world has gotten tired of promises, of a country that won't get its fiscal house in order, that continues to go around bullying. You know, Trump says, you nations who do this with the BRICS, another 10% tariff. That's not a tariff, that's a sanction. This is what's pushing them all together to begin with. So I think Lavrov's comments are massive. If they do open this up to all of these other countries, you're talking 90+% of human population that will have the ability to trade outside the SWIFT system and settle in gold through a series of multi-jurisdictional vaults. To me, it's the biggest news that's come out of the BRICS maybe since day one, since I started covering it. I'm not hearing it anywhere, which is kind of strange to me. You're hearing a lot about the new settling in Yuan and the multi-jurisdictional, but put it in the context of the BRICS, it's massive because it gives them legitimacy that they won't find with just having 10 or 12 or 15 countries. You now are talking about 160 countries, 170 countries. You're talking the majority of the world. And that should be factored into the equation and not, I think, overlooked.
Let me tell you something straight up. The BRICS are not just a geopolitical curiosity anymore. They're not some little side project that Western analysts can safely ignore while watching treasury yields bounce around or guessing what Powell will mumble next. No, they are more dangerous than ever. And by dangerous, I mean legitimate. That's the word that should scare people in Washington, New York, and London. Because what we are watching unfold isn't just economic competition, it's the quiet construction of an entirely new monetary architecture. And unlike the US dollar-based system, it doesn't rely on trust, it relies on gold. Now, I say this with all due respect to people still clinging to the old paradigm. But the signs are not subtle anymore. The Shanghai Metals Exchange has announced something that might just be the biggest move in monetary evolution since Bretton Woods. They are internationalizing, and not just with some digital slogan or financial marketing. They are physically expanding with a series of multi-jurisdictional depositories. The first is already under construction in Hong Kong, the next will be in Saudi Arabia. And after that, contracts are being laid down to dot the entire Belt and Road with vaults across Africa, Asia, and eventually into South America. This is not abstract. This is infrastructure. This is muscle. This is sovereignty being built brick by brick, vault by vault. And you want to know the genius part? Every participating nation will deposit gold into each one of these exchanges. Not a lot, just enough. Enough to settle trades, enough to restore trust, enough to build a new system from the ground up. A system that doesn't depend on New York or London clearinghouses. A system that doesn't freeze assets when it gets politically inconvenient. And it gets deeper. Because simultaneously, and this is no coincidence, China is internationalizing the Yuan. They have openly declared it. The Shanghai Gold Exchange now allows contracts settled in Yuan. Not dollars, not euros, not converted currency, straight yuan. It's the clearest indication yet that they are done playing second fiddle in a dollar-dominated world, and they are backing this new functionality with gold. Not hypotheticals, not speculation. Gold. Now, if you're listening closely, you'll hear what that means. It means that trade is being rewired in real time. It means that the rails are being relayed to run parallel to SWIFT. It means that we're looking at a multipolar monetary future, and the future is already arriving. You see, it used to be that the dollar system could bully and cajole everyone into line. You wanted to trade? You needed dollars. You needed access to SWIFT. You needed compliance. But that system is being hollowed out from the inside. And it's not by accident. It's the result of decades of weaponizing finance, of treating global reserve status like a bludgeon instead of a privilege. Ask yourself, what happens when countries like Saudi Arabia, Brazil, India, and Russia don't need to sell their oil, food, or minerals in dollars? What happens when they can do it directly, with Yuan or rubles or rupees, and clear it in gold if needed? You have a tectonic shift, a complete upheaval of post-World War II monetary assumptions. And it's happening. The N-bridge system, for instance, is not some beta test. It's already fully operational in at least 11 Asian countries and 5 in the Middle East. That alone covers nearly 40% of global GDP, and it offers 7-second settlement with 98% fewer fees than SWIFT. That's not an upgrade. That's a replacement. It's like going from the rotary phone to the iPhone in one leap. You don't just ignore that kind of leap. You recalibrate everything around it. And that's what the BRICS are doing. They're recalibrating, quietly, strategically, relentlessly. Take a step back. Look at the map. The Belt and Road Initiative isn't just an infrastructure program. It's a scaffolding, a framework for something much bigger, a cross-border settlement system independent of the dollar. And guess where they're building the vaults? Along that very road, in countries participating in the Belt and Road, in regions covered by the Shanghai Cooperation Organization, in nodes where trade will be settled in local currencies and netted in gold. Think about it. 50% of global population is in the SCO. The Belt and Road touches 70% of humanity. And all of them are being onboarded slowly, deliberately, into a system that doesn't need New York or London to validate anything. This isn't hypothetical. This is chess. And the West is playing checkers. Now, some critics say, oh, it'll never work. BRICS countries are too different. But let me ask you, when have countries ever needed to agree on everything to do business? What they need is common interest. And they have that in spades. They're all tired of being dictated to by a financial system they didn't design and don't control.
Yeah, it's like having it all. Look at the Bank of England held the gold of Venezuela. Nope, can't have it. Sorry. Now, again, and I use the United States in this context. First of all, when you have the bridge settlement network, M-Bridge, it's instant auditing, it's instant settlement, and it's instantly verifiable transparently. Think of what Zoltan Pozsar said, transparency in commodities. This is a marriage between blockchain technology and commodities and gold. Having it held in multi-jurisdictional locations with every country spreading their gold amongst those jurisdictions is genius, because it does take the trust out of it, and it's verifiable, and it's transparent. And that's exactly what it is. That's exactly what it is. Having it held in one location, you end up making the wrong choice by partnering with the wrong side, and you get locked out of your assets. And that's Venezuela would make that choice. And it's not for us as the world reserve currency to determine that. You know, and I always go back to Iraq. We're there 22 years later, and ask the people in the Middle East if it was justified destroying their country, toppling their regime, and didn't find the weapons that they said were there, and they're still there. So I'm not saying that America is holier than thou. I'm proud to be an American. I really am. I thank God every day for it. But the rest of the world would say, well, that's hypocritical, that they can do this, they can destroy a country, topple the regime, occupy 22 years later actions. It's not fair. We should not be the judge, jury, and the executioner is the bottom line. And I think that's the model that they're trying to go far away from. And that is that, yes, China may have a very significant role in all of this, but by putting the vaults all around the world in different countries with instant auditing on a blockchain network, you are in as trustful as you can possibly be in a system that isn't controlled by one player, even if one player is slightly more dominant in things than others. If all the gold was held in Shanghai and the Chinese control it, yeah, you know, what does that mean? But you have it in 20 vaults around the world, and everyone puts gold in each one of the vaults, and you now have something truly distributed that would keep that from happening. The things that I talked about with you 4 years ago, no one was saying, and I can say that no one was talking about the draining of the COMEX. I was. What's happening? The COMEX and the LBMA are being drained. No one was talking about BRICS. I was. BRICS wasn't a thing. Saudi Arabia wasn't even thinking of it. And a lot of it has happened. Not the way that I thought, all of it. Not all of it has happened, but a lot of the stuff that you and I have talked about, I called it a linear progression of events. It's happened. A lot of it has. And that's the way that it is. That's why I talked with you before about misdirection and the art of war. We live in a world where things are very competitive, and world reserve currency, investments, direction of investments, all that stuff is proprietary and private, and there is no reason that anyone worth their salt would tell the world what they're doing. So they do the opposite, or they drop crumbs, and you can see the crumbs as you continue to research it, and you have to. And this is one of the reasons that people aren't successful in investing, largely, because they don't take the time. If they spent the fraction of the amount of time researching to safeguard their money as they did making the money, they would be a whole heck of a lot more successful in preserving their funds and growing their funds, because they work so hard to put money in the bank and food on the table. They come home, they're tired.
And this is why when people say, well, the BRICS aren't serious, I just shake my head. They're already leagues ahead of the West in terms of infrastructure vision and monetary innovation. You think the Belt and Road was just about railways and ports? No, it was about laying the logistical foundation for a new trading bloc, a new civilization loop that doesn't need to touch the dollar system. And now they're weaving in monetary interoperability, international exchanges, and gold-backed settlements. You put those puzzle pieces together, and it spells one thing: independence. Independence from the dollar, from Western financial policing, from the need to trust a single custodian country. Let's just take a moment to appreciate how much trust was squandered by the Western financial complex. Venezuela's gold, confiscated; Russia's foreign reserves, frozen; Iraq, invaded under false pretenses; Libya, toppled. And then we turn around and ask, why don't they trust us? It's not a mystery, folks. The rest of the world saw what happened to Gaddafi after he proposed a gold-backed African dinar. They remember, and they're building alternatives precisely to avoid that fate. This new model the BRICS are pursuing, where countries deposit bits of gold into multiple international depositories, let's call it distributed trust. It's the antidote to the single point of failure model the West has championed for decades. You can't seize what you don't fully control. If everyone owns a little piece of every vault, then no one gets cut out unilaterally. That's profound. That's the future. And it's already happening. Look at the newly operationalized Enbridge system. Yes, the same one that connects 11 ASEAN countries and 5 in the Middle East. That's not theory anymore. That's practice. That's real-time, gold-settled, blockchain-verified, multi-currency trade. And it's not taking 3 to 5 days like SWIFT. It's taking 7 seconds. With 98% lower costs, you can't compete with that. The dollar system is analog. This new system is digital. It's like comparing Blockbuster to Netflix. Sure, people still used VHS tapes for a while. Now let's talk about Saudi Arabia for a second. When Saudi Arabia formally joined BRICS Plus, that was not just symbolic. That was a tectonic shift. For decades, the petrodollar system depended on Saudi oil being priced exclusively in dollars. That was the backbone of dollar supremacy. But now that same nation is joining a bloc building a when-settled gold-backed settlement system. That's not just diversification. That's defection. And for those still trying to downplay this movement by saying BRICS isn't cohesive, they have nothing in common, they say. I'd counter with this. They have everything in common where it matters. They're resource-rich, manufacturing-heavy, underdeveloped in some areas, and united in one goal: to break away from dollar tyranny. That's the glue. That's the shared purpose. And that's stronger than any ideological alignment. Sergei Lavrov's recent statement was one of the most underreported, underappreciated declarations in recent monetary history. Opening the payment system to non-BRICS countries, but not to the euro, the pound, or the dollar, that's a financial declaration of independence. It's like saying, you three, you're the problem. The rest of the world, welcome aboard. And who's knocking at the door? Over 40 nations at last count: Indonesia, Egypt, Nigeria, Mexico. These aren't fringe players. These are populous, resource-rich nations eager to escape dollar-based trade. When the new system becomes operational, what happens to the dollar? It begins to be bypassed, not replaced instantly, but slowly, decisively, permanently. One bilateral deal at a time, one when-settled oil trade at a time, one gold-cleared multilateral agreement at a time. This isn't an if scenario, this is when. The slow bleed has begun, and as I said earlier, it'll feel like nothing, until it feels like everything. That moment when the West wakes up and realizes, wait, the world doesn't need our currency anymore? That's when the paradigm snaps. You know, I always go back to that Zoltan Pozsar quote, "In the new system, trust is being replaced with verifiability." That's it. That's the shift. No more "in God we trust" stamped on debt instruments. No more promises backed by nothing but military might and IMF lending conditionalities. Now it's about assets, real, tangible, weighable, verifiable assets. Gold, silver, commodities. Things that don't default. And look, the Shanghai Metals Exchange is just one domino. Dubai is rising, Singapore is rising, Moscow is building, and these aren't just silos, they're becoming an interconnected web, a mesh of trade routes and financial rails all outside the Western orbit. The United States, by clinging to its weaponized currency model, has ensured its own obsolescence. Think about this. If gold is being used to settle trades at the international level and U.S. treasuries are being dumped in favor of real assets, then what underpins the dollar? Nothing. Confidence, maybe. But as inflation eats away purchasing power and U.S. debt tops $40 trillion, confidence becomes harder and harder to manufacture, especially when our friends in the Middle East and Asia are quietly dumping treasuries and loading up on bullion. And I've said this before, gold is not just a commodity, it's a neutral reserve asset. It doesn't belong to any one nation, doesn't carry any one flag, it's apolitical. That's why it's becoming the new foundation. And the BRICS know that. That's why they're not announcing a gold-backed currency. They're using gold as infrastructure, as plumbing, as a neutral settlement layer. And that is genius. People often ask, Andy, where is this all heading? I'll tell you, toward a world where dollar-denominated trade is the exception, not the rule. Where treasury bonds are viewed not as pristine collateral, but as risk assets. Where the SWIFT system is a relic, not a requirement. Where trade is settled in real time using local currencies and backed by vaults of distributed gold. And where the U.S., having spent decades outsourcing its manufacturing and moral authority, finds itself at the margins of the new monetary order. You think that's dramatic? Tell that to Brazil, settling trade with China in Yuan, or Saudi Arabia negotiating oil deals in multiple currencies, or India buying Russian oil with rupees. These aren't anecdotes. They're the new rules. What's wild is how quiet it's all been. No grand announcements, no Bretton Woods-style conference, just quiet, steady moves. It's what I've called the linear progression of events, and it's all traceable if you follow the breadcrumbs. You just have to be paying attention. And speaking of attention, let me address the average investor for a second. If you're watching this, you probably already understand that the mainstream financial media isn't going to help you. By the time CNBC starts talking about the gold-backed BRICS network, it'll already be fully operational. You'll be the last to know, because that's how it works. Smart money moves before the headlines. Right now, institutional positioning in precious metals is shifting dramatically, but you wouldn't know it unless you're tracking COMEX warehouse deliveries, LBMA inventories, and central bank purchases. And guess what? The official numbers show net accumulation of gold by emerging market central banks every single quarter since 2018. In fact, 2022 and 2023 saw the highest central bank gold purchases on record. What do they know that you don't? I'll tell you. They know the dollar has peaked. They know a restructuring of the global financial system is underway, and they're preparing for it by de-dollarizing their reserves and remonetizing gold. While the West snoozes in a haze of debt-fueled optimism, the East is hoarding real assets and laying the groundwork for a commodity-based settlement layer. That's why I get passionate about this. It's not just about metal, it's about sovereignty, about the return of monetary sanity, about replacing trust in institutions with trust in things, about removing intermediaries and replacing them with transparency. It's about a financial world that is less about power and more about balance. That's not a utopia. It's simply a counterweight. And you know what? Even if you're skeptical of gold, even if you're a digital asset fan or a crypto advocate, you should still appreciate the architecture that's emerging here. Because it's not gold versus blockchain, it's gold with blockchain. That's the BRICS vision. Tokenized gold, verifiable in real time, audited by math, not politics. That's not regression, that's evolution. What happens when tokenized gold becomes the new standard for settlement? What happens when that becomes embedded in cross-border central bank digital currency pilots like mBridge? What happens when AI starts allocating capital based on real asset backing and sovereign solvency instead of fiat smoke and mirrors? We're talking about a new game. And the BRICS aren't just players, they're building the board. And yet here in the West, we're still debating interest rate hikes like that's going to save the system. It's not. The ship has sailed. Look, you don't have to agree with everything I say. You don't have to believe that BRICS will overthrow the dollar tomorrow. But you do have to ask yourself, if even 10% of what we've laid out here is true, can you afford to do nothing? Can you afford to sit on cash in a system actively being hollowed out from beneath you? We're at a fork in the road. On one path, you keep trusting the same institutions that have delivered inflation, war, asset bubbles, and dollar depreciation. On the other, you prepare, you rebalance, you shift from promises to things. You protect what you've earned, and most importantly, you position yourself ahead of the herd. Because once the herd moves, it's too late. The exits get crowded fast, and gold, silver, commodities, they don't wait. They just reprice, rapidly, violently, permanently. So here's my advice. Don't wait for the press conference. Don't wait for permission. Don't wait for the next crisis. Act now, because the new system isn't coming. It's already here. And if you can see it and understand it and position for it, you won't just survive, you'll thrive. And I promise you this much. When the history books are written, this shift, this slow-motion tectonic shift in global finance, will not be seen as some anomaly. It will be seen as the beginning of a new monetary age, one where power is more distributed, systems are more honest, and wealth isn't just a game of proximity to the printing press. It's the era of return. Return to substance, return to trust, return to gold. And if you're watching this today, you're already ahead of 99% of the world. Now the question is, what will you do with that advantage?
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.